Hello traders! Today I want to present to you my course on how the global economy works, how to understand what is happening through the analysis of economic indicators, and how to understand the interconnections of what is happening in the system. We'll discuss what a business cycle is and how, depending on which point of this cycle we are currently in, to properly invest your own capital. This course is intended for everyone, including those without a broad economic education, but who wanted and perhaps simply did not have enough time to dive into the subject. Our problem is that the amount of information available to us is simply overwhelming. The same Bloomberg agency tracks up to 4 million different economic variables. We don't need that much information. Just a small percentage of all available information is sufficient. This course will help you focus on critical metrics, on critical indicators, will allow you to filter out the noise and concentrate on the most important aspects of what is happening in the global economy. This course will help you determine your investment strategy, give you the ability to understand what is happening in the markets, and also to make your own investment decisions. The global economy itself is critical. After each period of growth follows a period of decline. Since 1790, the American economy alone has experienced 46 different business cycles, each time on a wave of euphoria. We try to convince ourselves that the period of crisis and depressions is a sin of the past. And each time a period of euphoria is followed by a period of quite severe decline. We could observe such dynamics in 2022. For example, in cryptocurrency market. The fact is that the cyclicality of the economy has not disappeared anywhere, and we must proceed from the fact of that the cyclicality of economy will remain with us for a long time. That is why, as an investor, need to clearly understand what type of investor you are. You can be a long-term investor, you can be a speculator, you can use certain strategies like arbitrage, you can short certain assets. All of this is legitimate. In this world, there is no concept of right or wrong. Your investment decision, your investment strategy should reflect your view of the world and your investment approach. And the main thing you should have when making investment decisions in context. Why and for what purpose are you investing in particular assets? What data are you analyzing? What data do you rely on in making your decision? And if this data shows a different dynamic than what you expected, it should serve as a signal for changing your investment portfolio. You must understand that you are responsible for your capital. If you do not entrust management to third parties, This very context of making an investment decision plays a fundamental role for you. In this course, we will not cover aspects of portfolio or risk management. We will not dive into technical analysis or the depth of training. This course shall give you a fundamental of understanding the process that lies beneath the moment of the entire global system. Again, it's important to understand that there is no holy grail. Our brain is not capable of analyzing the amount of information available to us, especially considering the fact that trading on the markets today is mostly automated, and most volumes are generated by algorithms. We need to ensure that we can isolate information noise and have a clear context for making decisions. As a basis for analyzing various indicators, I have taken several websites where almost all economic information is available. Let me give a few examples. For instance, to analyze economic indicators, we can use investing.com or Trading Economics. For more global factors, we can use the International Monetary Fund database. I also recommend using Yahoo Research, which provides a huge amount of information, both on economic parameters and on parameters of various markets, stocks, bonds. All data on this site is freely available. We'll also use a large amount of databases from organizations that belong either to states or interstate. For example, the statistical database of the OECD, an organization uniting the leading world economies. We'll look at the websites of various departments of the US administration. For example, Treasury, Institutional Capital, or the pages of the Federal Reserve System's branches. For graphical analysis, we can use TradingView or the same Cofin site. Of course, I recommend using Twitter, where you can find most of the useful information. And due to the fact that I used such a large number of sources, the graphic accompaniments or chart will be very diverse. And what we need to understand is that the parameters we have freely available cannot always help in a good analysis. Sometimes we need to modify these parameters to get a clear picture. Let me give an example. If we have an absolute indicator, sometimes it's useful to look at and calculate the rate of change of that indicator. That's to see whether it's growing and at what speed it's going so, or falling and at what speed it's going. You can perform these operations yourself using Excel. Later I'll show you something interesting about it. Or if you are too lazy to do this, then of course you can follow my work on YouTube channel and I will do this work for you, but not everything. At this point, I would like to express my gratitude for the help in preparing the course to my colleague, a good friend, Pavel, from Kiev. Now, together, With Pavel, we are starting to create an interactive dashboard in Excel about economic indicators. The goal of this project is to provide all people who are interested in macro with the opportunity to visually perceive what is happening in the system, to facilitate the analysis of a huge number of indicators, which we will also discuss today, or better to say in the next video. And of course, the more people this course unites, the more people we attract to the topic of macroeconomics. The greater our motivation will be to create such an interactive dashboard as quickly as possible. On the next video, we'll discuss secular long-term economic trends and how they affect such economic indicators as GDP, unemployment, interest rates on debt obligations. I provide to you attention completely free of charge. Okay, right. Thanks for watching. See you on the next video.